All right, looks like I got a hot mic. Morning. Welcome to Forex.Today land. My name is Wayne McDonald. I'm going to do some technical and fundamental analysis today. So let's go. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. You're saying YouTube's lagging? It shouldn't be me. I rebooted everything on my end. Let me just double check. Google speed test. No, well, 560 is actually a bit slow, but okay, 580. I'm running 580. Yeah, upload's a little slow. Yeah, it's mediocre today, but that should be enough. YouTube should be fine. Maybe if you're laggy, maybe just refresh for you. Anyways, good to see you guys. Today is an opportunity to be a currency trader. Sorry, I'm looking at my charts here. Cool. So ask questions, get involved. We'll cover technical analysis, fundamental analysis, or whatever you want. Sorry for... Yeah, I had to reboot that machine. It wouldn't log on after the reboot of the router. So anyways, look at me. I'm in the world. I'm coming live to you from... I'm right here. Right there. So it's a beautiful day here in Georgia. The sun is shining. It's a little warmer. It's not as cold as it's been. And I'm sipping a coffee, looking out my window, and a deer walks by. And I'm like, oh, it's all beautiful. And then another deer walks by with a broken leg. And you're like, oh my God, I don't want to see that. I don't know if it's broken, but it was definitely hit by a car at one point. It looked like a long time ago, but it only uses 3 of its 4 legs, and you're just like... So anyways, I threw a lawn dart at it. We're going to eat it for dinner. So anyways, beautiful day. The coffee's good. The sun is shining. My tulip tree is in full bloom, which is pretty amazing. So lots of things to be grateful for, and... the markets might be warming up. Awesome. Perfect timing. Well, at least maybe we have the left leg of a double bottom or something. But yeah. Ananda says, yeah, nice pullback on euro dollar overnight. Yeah. Oh, for sure. And maybe this rebound is, part of that rebalancing we've been talking about. And I think it was NASDAQ was technically down 10%. And then... people buy it. Why? Because people buy when it drops 10%, but they don't think it's a reversal. They believe it's a dip. But that's what we've been talking about. So that might be it. Maybe that's it. We know, between now and the 15th, which is, I don't know, the end of the week, we believe this week or next week is going to be the bottom, right? So maybe it's now. Cool. I'm all good. So I'm happy with that. So ask questions, get involved. We'll cover technical and fundamental analysis. Really, generally, I follow your lead. So you're the boss. I'm just a humble currency trader. And then we'll see where this journey takes us. I'd like to thank the sponsor of our community, tradersway.com. Please open an account at tradersway.com. Seriously, that's how you say thank you. They're investing into your education. You're going to need a broker anyways. How about the one that kind of already is invested in you? Tradersway.com, open up a demo account. Bottom right-hand corner, takes, 10 seconds, literally 10 seconds. And then you can download MT4 from the back office or CTrader. There's some other things that you can do there. And I think you'll fall in love. Okay, tradersway.com. I'm trying to keep up with your chart, with your chat. It's weird, my eyes are a little blurry today. I had my eyes dilated yesterday. Maybe they're still dilated, hopefully not. Yeah, I got suckered into a new pair of Tom Fords. They're like, sir, we're going to have to run a credit check on you. I'm like, really? They're Tom, really? I like Tommy, though. I like Tommy Boy, Tom Ford. He used to work for Gucci, and he's like, man, this is for old Chinese ladies. And they're like, get out of here. You don't know anything about Gucci. But he was the top dog at Gucci for years. And he's like, dude, this is really outdated, outstyled stuff. You guys need to change everything. They're like, okay, we'll start with you. So they got rid of him, and he went on his own. Now he sells $700 candles at Macy's. You're like, dude, seriously? But anyway, so I need something in my eyes. Can't quite see what you're saying. Okay, so dollar, just a little bit of weakness here. How nice is that? Boo, 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 boo. This account is from years and years and years and years and years and years ago. That's why, Raul. Okay. Also, he's also gorgeous to the eyes. Is that right, Marina? He's gay as gay can be, though. Yeah, I think I told you guys, I went to the liquor store buying some booze, and the guy says, you look like Anderson Cooper. And I'm like, oh, thank you so much. And he says his sister thinks that Anderson Cooper's beautiful. I'm like, well, tell her good luck with that. So I got the Anderson Cooper gray hair. All right. I'm like, I think you mean Bradley Cooper. And then he's like, no, Anderson Cooper. All right. So what do we see here? Kitty Cat doing well. A little bit of a rotation here on USD index, which we believe is going to happen this week or next week. So the fact that it happened on a Monday night, Tuesday morning, hey, I'm all good with that. Also, you might remember Euro dollar had something interesting about it yesterday that would predict something like this. So we'll take a look at that later. Okay, and yen's coming down. Okay. I was thinking maybe we'd have some yen strength, but that hasn't really occurred. Very interestingly, it hasn't occurred. So, okay, cool. I mean, down is good because we do believe we are global macro expansionary traders. So that's good for that play. It's interesting. I would have thought a little more strength than we had. We had it for a bit, but not now. Well, that looks really skewed. So anyways, very interesting, as they say. Okay, cool. Kitty Cat good. Euro down. Okay, this will probably change, but that makes sense. A little bit of stability here on the Aussie. Pig doing fine. And Kiwi we already know is weak. So, all right, not too far from what we think, right? This is about as I'd say the yen is the biggest surprise, but it's all good. It's all good. So let's take a look around the world. What do you guys want me to cover today? What's the big thing on your mind? And I'll try to cover that today. Oh, right on, Barry. Very cool, Barry. Enjoy. Lucas is very little profit to bring home. No, but it's not. It's not that. Think of the yen acting as a reserve currency. Think of it that way. Don't think about it as Japanese. I mean, you're saying repatriation. I mean, okay, in that way, yeah, that's a good thought. But I look at it also bigger than that. So if it was a reserve currency and people were taking some profit for other reasons, right? For whatever reason, they're buying JGBs. But what we're seeing is they're just not buying JGBs. So I think the bigger question is Asia moving farther and farther away from treating yen as a reserve currency? Now, technically it's not, but it kind of acted like it for, decades as sort of an Asian reserve currency. And maybe that just it's not necessary anymore. And I'm starting to see, like, Swiss franc is not acting the way it typically has either. So there might be a fundamental decoupling of older trends. So those are bigger sort of academic questions that we need to answer. So, but Lucas says, yeah, a little less profit bringing home, therefore less taxes. Yeah, could be, sure. Yeah, I suppose with 2020, I don't know, were car sales down or up? It's some industries did really well in 2020. Okay. All right, so let's go through this. A lot of yen pairs and stuff. Okay. All right. I mean, that's what's going on now. Okay. We can do some yen. Okay. This is the one I set up for you yesterday. Did anybody make the trade? Hmm? No? Yeah, Johnny got that one? Yeah, Thiago says my entry is on US trade, but not yeah, and as me you or as me I you as me I. So, anyways, this one is moving along. Let's kind of break it down into smaller digestible pieces. Okay. You have what we call a bottom. Okay. A higher high. So what should a bull do? A bull should wait for a higher low. You do this by looking left. You'd probably connect this with this. So I would do it like that. Okay. And I believe I talked about Fibonacci. Was it yesterday or it might have been Friday? It might have been NFP when I did it. But anyway, so I just did all that. This is called a 1, 2, 3. And this area is a suggestion, a guide. Okay. And we call this a roll reversal. Okay. You might also use that one as a secondary guide. Okay. But we call this 1 is a double bottom. Okay. So this is 1. 2 is the higher high. And as soon as you get the higher high, you say, aha! I'm going to wait for 3, which is the higher low. Or, said differently, the roll reversal. Okay, and this is 3 here. Okay, 1 is the double bottom, 2 is the higher high, 3 is the roll reversal. It's probably my favorite setup, I'd have to guess. Marina said she's been buying the pound yen, which is actually a better trade. Yeah, because there's momentum behind it, right? It's not a lot of momentum with euro, but if euro's going up, they're all going up. That's the way I look at it. Okay. Take a look at Aussie, Aussie, Aussie. Different scenario here. Okay. So here you could wait for the breakout and catch the pullback. So here's what I would do if you're going to be conservative. Let's trap this. I don't want to. That's the wrong one. Delete this one. First of all, you trap it. Okay. And then the next thing you can do is let it break. And then let it come back. And then you buy it. Okay. I want to remind you as well of the trade I want you to be doing. Okay? So there's all these techniques and stuff. All the techniques are noise. Okay? It's what you do after. What you're supposed to be doing is like buying here. If you were a bull, you knew what to do. And you had 2 prices in which you were interested in buying, and 82 was definitely one of them. You also knew the exact minute to be at your chart. Okay? So I expect that you're long somewhere in here, and you're done. That's what I expect. All this other stuff is mediocrity at best. For this week, this was the buy zone. So Sunday, it was necessary for you to be at your charts to buy it here and put your stop there. If you're a bull. If you bought this, you would do that. And that's that. The techniques you do after that are, again, it's noise after the mission, so to speak. So Gary got both of those. Well, that's exactly what you should be doing, Gary. Thank you. Okay. Sky Killer, the ECB is not capable of moving this market. So the answer to your question, no. All right, let's take a look at Marina's trade. Okay, this is beautiful. Okay, we have up, up, and up. Here I thought we'd have a bigger pullback, if you remember. Okay, but we have up or up or up is the trade plan. Okay, let's get rid of this. Okay. Was this the monthly target? I think it is, isn't it? But anyways, you can see we have up, up, or up. Okay. So in Asia, there was an out of position trade here. I don't know. Let's flip over to this one. No real ability to catch it, right? There is this roll reversal. Let's go back this way. I want to use the one that already exists. Okay, this is why actually we draw these things. Let me back out here. It's exactly why we draw these things, because price becomes relevant in the future. Okay, so we had a double top here, so clearly it was important enough that all bulls took profit. Okay, now obviously bulls bought back in right here on a role reversal. Okay, great. So this is resistance, okay, and this becomes support. Okay, notice after the double bottom, higher, high, higher, low, all that kind of stuff. And we continue this, but notice, I mean, look, this one wasn't perfect, but there was other things going on at that time. But look, this was perfect, this was perfect. Then there was a little breakout, and then it was a retest. Okay. Okay, cool, right? Okay. And now this one's Oscar Mike on this one, which is, interestingly enough, tomorrow's trade. And tomorrow's trade, you would have been taking in London Open, which is crazy. That's how aggressive this is right now. If you bought at London Open, it's based on tomorrow's trade, so you're actually trading a whole day ahead, but you're out of position. There's no other real way of doing it. I mean, maybe use different techniques, but the different techniques end up kind of doing the same thing, just with different methods, right? It's the, it's the different ways of skinning a rabbit, but ultimately you skin a rabbit. You're right, but that's interesting. It shows you how aggressive it is. So up, 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 down, down, buy. Okay, there's the Asia Open. Okay, London Open already on tomorrow. Okay. Okay. So it depends on how bullish you are, right? If you hit this, it can come down if it's a profit-taking zone, because it's kind of too far too fast, right? You're already in tomorrow's trade, so some people might bail on it. That's why instinctively I want to look, I need other information. This is just day trading. These are just pissy little day trades. Easy peasy. What we want to look is beyond that and say, where are we going? Okay. Okay. And where we're going is here. 152. But that's what we talked about like a month ago. 152. Right? So that's the beginning, though. See, last month the target was 152. But now we're in a new month, so now the new target is 154. So this week we have permission. This 149 entry on Sunday is predicting 152. Okay? And if we can get there, especially on like a Thursday, then we'll have a drop, and then we will rally this up on next week's entry to 154. You see the, right? But if you guys remember this entry here, back here, way a million years ago, all the way back in March, the beginning of March, we were going to 152. Now we're going to, right, higher up. Wait, maybe it was a February. Let me go back a little bit further. Maybe there was also a February. Oops. No. No. Anyways, we got to work our way up, is what I'm saying. So where are the stairs? You got to look for the stairs. One way of doing it, like, for example, let's use this methodology, where we take this and we go, okay? So there may be, at some point, a little retest in here. Okay? So it's moving, it's hot, it's fast. Day trading is probably not the right way to do this because it may not give you awesome entries, right? So like let's simplify this again. Because it's moving quicker, it's harder to catch. Does that make sense? Have you ever tried to catch a chicken? Have you ever tried to catch a pig? A baby pig? Yeah. Anyways, right? Like, it's hard to catch these moving targets. So you had the Asia Open, and you're already on tomorrow's trade. And what I was showing you is this is basically a retest of a bigger support zone. So it should be continuing up. But, you know, you have to be quick. So like yesterday, the buy was here. And of course, your stop goes here or here. And then today, the buy was here. And then your stop goes here. Okay. Notice that almost all, right? These entries typically, Asia's been doing very well for you, even as a day trader. Okay. It never knocked you out. Okay. So now you're working your way up. What I'm suggesting here, if I'm not clear enough, is you got to have this first and foremost. Okay. Like, isn't this just easier than all those other trades? I mean, this is what I meant by after the fact trades. Like, these day trades are great. They're fine. But like last week, you could have just bought this and been done. What did you do last week? You bought the pound yen. What did you do this week? You bought the pound yen. Okay, and you're done. You see? Just if you have a job, for example, if you have a day job, and Forex is not your primary source of income, but you want it to be, you're learning, you need to become a swing trader immediately. So that you learn this first, so you work 1 hour a week, for example. And once you get this down, which is going to give you a couple of things. One, you get your vision, a longer term view of your trading. It's not just of the market, but that you become a longer term visionary for what you do. Long term for your fundamental analysis, long term for your, or maybe increase the amount of time you hold a trade, but even just the view of you being a trader. You having a vision of your trading business, your value creation process. Okay? But you also learn as a swing trader, you acquire things like patience and discipline on top of getting better at technical analysis, on top of getting better at fundamental analysis, as well on top of you looking at what you do as a business, right? Not just as a trader, right? You don't just scalp like Fortnite, okay? Even if you become a scalper, spot trader, day trader, you'll have a vision for that versus just sitting down and making a bloody mess of things. If that is your vision, you'll have a bigger vision of what you are and what you do and who you are and who you do. Right? And that's important regardless of the time frame. But you're going to need to have patience and discipline and a strong understanding of how the market moves and why the market moves, regardless of the time frame. And if you don't have a lot of time, then learning how to swing trade is the place to start. And then you can look at position trades, you can look at portfolio management, you can look at day trades, and then drill your way down into intraday trading, market open trading, volatility trading, scalping, stop hunting, that kind of stuff, right? But I want you to start at swing trading, because it'll give you the characteristics of success that you'll need to do any type of trading. Okay? If I teach you how to swing trade doing what I do, and you're like, okay, I did what I learned from Wayne, I got really decent at what he was doing, but I see ways to tweak it. I want to add Elliott Wave to it. And then you go off and do a new world and you learn Elliott Wave as a swing trader. I believe you will be great at that. Maybe not because of the Elliott Wave part, but you learn from me patience and discipline and having a bigger vision of what you do. You will become a success in your own right, regardless of the techniques you use for trading. You will have the characteristics you need for success. You see that? So if you only have an hour a week, golly, just make it Sunday at 5 p.m. So at least you can just buy this and go away. Okay? If you're doing something different, you're making it more complicated. Okay? Look at, this is the exact open. This is the exact open. Okay? Somewhere in there, there's opportunities for you to trade, and you're done. What'd you do this week? And by the way, on a Sunday, at least for me, I don't know where in the world you are, but Sunday at 5 p.m., if I had a day job where I had a 9 to 5 on Monday, Tuesday, Wednesday, Thursday, and Friday, these trades are on Sunday. You take a trade, I'm almost always out by the barbecue. I take that trade, and then I have to go barbecue because it's on the weekend. It's Sunday. So Sunday at 6 o'clock, I'm at the barbecue staring at my phone, watching my trades tiptoe into profitability. That's what you should be doing. Even if you have a 40-hour-a-week job, you can swing trade. Come on. Okay? And if you don't have patience and discipline, it doesn't matter what technique, what tool, what indicator, what guru you use, you're not going to find success. So you might as well learn patience and discipline through the process of learning how to swing trade. Why not? Okay? Cool. Hey, by the way, we're going to do a macroeconomics class today. If you're in my swing trading group or in my portfolio management group, we are meeting today at 2 p.m. in the war room. Oops, I just went crazy here. What the heck just happened? There we go. Ooh. Click the wrong button. What just happened? There we go. I was trying to move this window out of the way. There we go. So, one of the things I'm going to tackle today is actually the question that somebody had yesterday, and I didn't really know how to explain this this idea. The square root of h over the square root of L to create pivot points. And I said, well, that would be weird because you'd have a central pivot point, and then you'd have resistance, and then you'd have resistance and resistance and resistance and resistance. And all of a sudden, it would begin to blur into almost like pointlessness. I thought about it like, how do you explain it? I got close with my explanation. Let me draw it this way. And we have units 1, 2, 3, 4, 5, 6, 7, 8, 9. 1, 2, 3, 4, 5, 6. Okay. So what I was saying is, you add one, it would end up being, it would look like this. Oops. So, right, we're talking about the square root of something. So if you're doing like the square root of y, it would look like this. What you're looking at is it right? So you get one, let's do it this way. 1 unit of something new is going to have a lot of output. To get double the input, you're going to have 4 times as much. And to double input again, you're going to have 9 units of input to get 3 units of output, right? 1 unit of input to get 1 unit of output, 4 units of input to get 2 units of output. and then 9 units of input to get 3 out. And that's what this is saying. And then this creates a weird curve. So the farther you're out, the curve looks like this. It spikes early and then it goes like that. And that's, so imagine now to the person that said, hey, I found pivot points that use the square root of H over the square root of L. I'm like, well, you're going to get diminishing returns. We know that. That's what that means. And so you'll have like, you just get this weird, because eventually they're all going to get to, right? So you're going to have lots of pivot points, and like one like this and one like this, and infinite above and infinite below. And because they're diminishing, they're getting closer and closer to 0, right? So after 9 inputs give you 3, 16 gives you 4, 25 gives you 5, 36 gives you 6, right? And all of a sudden, everything's getting closer and closer to an infinite number, which makes these tighter and tighter and tighter. And I'm like, why would that be helpful with pivots and like for trading? And I don't think it would be. Okay? So it just seems like a sales pitch for a product is what it smells like to me. Okay. Richard says it comes from the probability analysis. Yeah, but the probability, it's not, I don't know. It's a different form of standard deviation that I don't think actually will work out. Right? Like, it's borrowing math used for something else and plotted on a chart and then sold to you for something. Like, it doesn't accurately describe trading decisions. Okay? Remember, that's what we're trying to do. We're trying to see what other people are thinking. And we're trying to understand their decision-making process. Remember, we're not trying to marry an indicator that's going to make us rich. It's not going to lead to happiness. Okay? Right? You see that? So I don't think that's helpful. Maybe it's helpful in some weird analysis of statistics so that you can find outliers or something, but that's not what we're doing here. That's it. So anyways, what we're trying to understand is, where is the support and resistance? Okay. All right, so let's move on. Let's do some dollar pairs. Okay. So this is what? USD Kitty CAD. Okay. Take a look at USD Kitty CAD. So I shorted this thing here at 126.50. My stop's way up here. I could probably tailor it in a little bit. Okay. So it's a filter, of course, so I'm trapped and I'm not in a good place based on this, okay? So I think the trap is kind of like this, but I'm trying to filter through it, okay? I'm trying to filter through it with macroeconomics, and it's tough because sometimes you get the trade and you got to wait your turn and wait the outcome. So this isn't a very good entry, okay? But that's the logic going in here. If you take out the monthly, okay? Let's back up. Okay, so we are in this range, and my analysis tells me eventually we will be down here. So okay, fine, but we don't know if the timing is yet. So I'm taking sort of it's not like a duration risk or something. But what do we know? Well, if I was a bear, since I am a bear, let's say, this is the central pivot point, and that as long as we're below the central pivot, it's indicating that we will work our way down. Okay. Okay, so I'm not really trading against myself, which is good. Okay, and then here, this is now weekly, and I'm essentially short, okay, a rejection off the M3, a rejection off the monthly central, so weekly M3, monthly central, okay, and now I'm short at the weekly central, and so far, that technical analysis indicates that we should be on our way to 126. Okay, at which point, if I can get below this area, I would be able to move my stop to break even. So it's a mediocre trade, but I'm just kind of doing what I intend to do over the month, right? Because remember, at the end of the year, and even at the end of this month, I would expect USD CAD to be lower. I don't know that to be true yet, but I'm acting in a way that the outcome will be correct. Okay. 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 So I can't add more because right now my risk is we stay in the zone. Okay. So my choice is to leave the stop way up there or get stopped out early and then try again a little higher. Okay. Because I don't want to be way wrong, but I guess I could make the argument if I'm that wrong. But I think what I'll do is like maybe break even or lose a little on this one. And if it goes higher and I get an opportunity, try it again around 27 and then put this up here at 28 and walk away. It's just, I'm trying to fold in weekly and monthly. And remember, this whole period here, we knew there's a rotation this way coming. Okay? We knew somewhere in here there'd be an up, a big up, that could last a week or two, and then a big down, which will last a month or two. You see that? So I'm just tiptoeing in this way and trying to reduce my risk as much as possible based on seasonality. Okay. Okay. So we talked about this one, was it yesterday? Could be. We have this bottom lined up pretty big. Okay. So the question is this a turn? So for example, I'm a bull on this, right? Oh, what just happened? I'm a bull on this, as you know. So we have to set this up bullishly. Okay. And the question is now, is this game on for bulls? Bottom, which we've identified. I don't remember why. Maybe it's a pivot or something. I don't have it on this one. Okay. Okay. We even have this extended down to about here. So we have a predicted bottom around 138. All of a sudden, a giant rally. Is this game on? On the move? Oscar Mike? Is that it? Is that the sign you've been waiting for? Remember, I've been asking you to identify the sign you were waiting for, so that when you see it, you'll recognize it. Are you now going to be long the pound dollar the rest of the year? Oh, is that right? Thank you, Jim. I thought it would be a monthly, but nonetheless, is this part of your vision? Are you going to be long the pound yen the rest of the year? The higher high predicts a higher low, but you might have already missed it is what I'm trying to show you. So you know the higher low, right, is likely to be, let's say, 138.50, okay? I mean, I'm looking at the pivot points, then I'm throwing in a midpoint psych level. So I'll put it way up here. And I'm actually looking here. So this is tomorrow's buy zone. I can see we're near a midpoint psych level. So let's add that. So you go, right, 1.385000, midpoint psych level. And you're like, yeah, yep. Okay, that's right. That's the role reversal. Take this old thing we did last week, okay? And that could be it. That's it. That could be it. That might be it. That's what I'm saying. We've been waiting. Let me remind you, we said somewhere between February 15th and March 15th. Okay? We would get, how you say, what are we looking at, pound dollar? We would have downward move on this pair and then upward move for this pair. That the downward move would be a couple of weeks, and this would be months. Short-term short, long-term long. And this rotation would happen in the period of February 15th to March 15th. Okay, so I've been prepping you to be ready for the rotation of when is it going to fall, when is it going to stop falling, and when are you going to start buying. Okay? We also said this could have something to do with the Mar 17th Fed meeting. Okay. But we know the rotation is going to happen by that time. Not at that time, but before that time. You see? So you have to have this in mind, in my opinion. If you had this as an opinion, you could be ready, willing, and able. It would change your behavior. And that's one of the things we've been talking about in the swing trading group, is having these plans actually drawn out and printed out and posted on your wall. You're going to recognize when you see it because you've already envisioned it. Kenneth, we covered it in the swing trading group. I don't remember when, actually. I covered it recently, and I don't remember where. Sorry, I do a lot of trading. Keeps me sharp, man. Well, more than that. I handed it out. I don't even remember what that was for. I printed it out and I handed it out. But I don't remember. Was that the macro course? Okay. Was it? No, it was the swing group, wasn't it? Well, no, I covered it in great detail. Well, I guess it's for those that are in the swing trading group. There you go. This is what we're doing today, by the way. Okay. Yeah. All right. So let's move on to a different one. So USD Kitty CAD. Well, I guess we have to do Euro Dollar. All right. So you tell me, why did I buy this? It's nothing but straight down. So why did I buy Euro Dollar? You can see where I purchased it. Why did I buy it at 118.50? Well, more than short dollar. Why did I do this one? Insert template, position trading bullish. No, it wouldn't be there. I have to do monthly pivot points, I guess. Okay. The rules of engagement. This is a short. And if you hit this target early in the month, okay, and I will say the 8th is early. It's not the middle, so it must be early. Okay. Then counter trend back to the central pivot. Okay. And the reason for it is the bears will take profit. So I'm hunting stops. Okay. Hunting bearish stops. And if I can trigger enough stops, this goes up. Okay. Ananda, it has to be early in the month because I need bears to take profit. The other way is, I don't know, 2 decades of observation allowed me to create that rule. I find if it happens in the end of the month, it was slow and everyone traded and it did what they thought. Maybe some people will take profit and other people will let it run. It's doing what they thought, so there's no big deal. If it happens early in the month, they hit their target early and they're like, oh, snap, what if it reverses? So they exit, therefore it reverses. It becomes a self-fulfilling prophecy. It makes people think, it makes people act. Some people get greedy, some people get fearful, and they just take profit. It's just my observation. So that's why I have that rule of engagement. So there you go. That's where I am. Correct. Yes. Yeah, your stop is always below support if you're a bull. Okay, HK? Remember, support is definitional. Okay? You see, that says S1, that says S2. Those are support. Okay? right? So trading above that, you would put your stop below S1. Okay. So where am I now? Where's the nearest support? Okay. So for example, okay. Why there? Well, that's support. Look, astute. It's below support. Easiest ever. Easiest question ever. Where do you put your stop? Below support if you're a bull. If you're a bear and you sold at resistance, well, then put it above resistance. Okay? And then price action will tell you when you can move it. So, like, for example, let's say it does this. Okay? I can buy another one and then move this to BE. Okay? And then have this one below that. And then it makes a higher high, and then I can move that to BE and move this one to profit. Okay? Okay? But I could be long this until the 17th of June. Okay? So, look at what we're really doing. Don't get all caught up in pivot points. It's not going to save you. Okay? What we're looking at is that support? See, my threat here is this is resistance, right? And then you say, well, how do you know? I don't know. That's why I need to manage my risk. So the worst case scenario for me would be this. But by the time I face that risk, I'll have my stop close, closer, or with profit locked in. Okay? You see that? So I'm aware of it and I can handle it. Of course, I could choose to wait, right? But whatever. I'm 2 standard deviations from a mean, so can't be that bad. Now, check this out. I have a longer point of view as well. I guess that is monthly. So here's what I'm thinking. Up the rest of the month. Okay? Down. And we're on our way here. I would like to make 1,000 pips on this trade. So I'm at 118.50, which means I have to go to 1.2850. Okay. That'd be a good start. Yep. No, HK brings up an interesting question. You know, as the money gets bigger, you focus on the money more than the pips. But the money should be so small that it's irrelevant. Okay. So do it this way. What lot size will you trade if you had $1 million in cash? If I invested into you, HK. All right, HK, here's $1 million. Okay. What would your lot size be? Okay. Well, Jeff is kind of on it. As little as possible is the answer. Okay? So think of it this way. I mean, play around with the thought process, because if you don't get the thought process right, the variables will never make sense to you. Let's say, think about your trading as a quarter. You have Q1, Q2, Q3, and Q4. And each quarter, you're going to produce 10%. So forget about monthly. Okay, you want to think bigger than even a month. Who cares about a month? You should understand the personality of the month, because the personality of the month will determine whether in January you make 2% or 8%, but it's not going to be your trading. The market, the beta determines the outcome. Okay, so what are you going to do in this period? Okay, and what's the biggest drawdown you're allowed to have? I always start with that. What's the biggest drawdown you would like to accept for a month? That's a quarter. Okay. Well, H case is 3% in a month. You wouldn't last the first quarter. You'd be fired. No, unacceptable. You wouldn't make it through the first quarter. So lower your leverage. Yes, that's what I'm saying. You're not allowed worse. Yeah. I'm telling you. So if you had 3 bad months in a row, you're out of business? Like, think of it this way, guys. You can't say to someone, I'm going to try to make you 3% in a month, but I might, or in a quarter, but I also might lose 10% in a quarter. Then what's your risk-reward ratio? 0. I'm like, what the hell? Oh, I might make you 10%, but I might lose 10%. Well, nobody's interested. Thank you. Hit the bricks. Go try Robinhood, flip some GameStop, right? I mean, just you're not making any sense. Okay? You're fired, by the way. -10, you're fired. Get the hell out. We're not interested. Piss off. You're not adding value. So now you got to think about it like, maybe for the quarter, a bad quarter would be 3%, but you better get your crap together. So now you're like, well, Wayne, if this is going to work, my trades are going to have value. Right? Like, my trades are going to actually have to be worth a lot. I can't just make lots of little trades. Each individual trade is going to have to actually produce. Yeah. Yeah. That's what I'm saying. Make sure you have logic in what you're trying to achieve. This is why I've said a million times you need to do a business plan. What big sales pitch are you going to give to a client? Well, I might make 10%, but I could lose 10%. Nobody's interested. That's a terrible sales pitch. Nobody wants that. 10%? You're fired. What the hell's wrong with you? 10%. Right? So, make it better. Shouldn't you risk less than you can achieve? Like, that's a 3-to-1 risk-reward ratio. Yeah, if you had a bad quarter, okay, well, you can recover. 2 bad quarters? Ooh, I don't know. You're going to have people that are not believing you anymore. Right? 6 months goes by and you're -6%. They're like, Well, you know, when we invested in you, we thought we'd have a return. Right? Like, you have to beat inflation. You have to beat other investment opportunities we could have made. So you might say, well, dude, I'm only down 60,000. They're like, well, we kind of expected you'd be up 60,000. Like, if you can't do what you promised, we got other things to do with the money. Okay? You understand? Right? So I want you to think about your trading that way. Now, the next step in the academic process is, what are you going to do in January, February, and March? Now you have to think about it in advance. Well, what's January like? Down, by the way. See, I knew. How many people here agree that I knew euro dollar was going to fall in January? Like 100% without a shadow of a doubt. Okay? But see, this is how I think. Okay? This is how I think. What's January going to do? What's February going to do? What's March going to do? And then what are the next things we talk about? Well, I'm thinking about June. I'm thinking about the end of the year. I'm calculating GDP a year in advance. So now I got even farther out, right? But I break it down. So what's going to happen in January? Okay, how much am I trying to make? 3% would be great. Okay. What about February? Is that going to be a big month? I don't know. What about March? March is going to come, right? Come in like a lion, go out like a lamb. Okay, but I'm also thinking about Q2. So here I'm a bear, then we're shooting at rabbits, and now we're in this rotation out of Q1 into Q2. But to make the math work, so let's say in Q1 I only produced 4%. Okay? But what if I made 14% in Q2? Well, then it works out kind of, right? And so how do you handle that? Well, there's a rotation in here. I want to lose as little as possible at the end of Q1, maybe even make some money, right? There's no pressure. If I set up my trades and have little losses, it's okay because my trades aren't big, right? But in here, I'm planning a rotation, right? So January, February. So I want to be in these. So we're in here now, actually. Sorry, I was actually looking at months, right? Anyways, I'm looking at this now right? I'm actually trading April, May, and June right now. I know we're in the 8th of March, but I'm washing out Q1 as getting through it, dealing with the short-term impact on my long-term analysis. Do you understand that? And that Q2 is about being in the trend again. So I'm already investing with that theme. You might be interested in today. I'm already on June. I'm thinking about June, okay? Which means if I can be on the 8th, so I'm long euro dollar right now on the 8th of March, right? So we're in here, right? So March, April, May, June. And I could have trades with close to 1,000 pips on them. And I know because I'm going for a little extra icing on this cake. Not bigger lot sizes, but let that one go, let the next one go, let the next one go, let the next one go, okay? And let them run, okay? I'd like you to have 20 positive open trades, not one big trade. Because one trade can lead to a big loss. Well, I'm not interested in that. It's not mathematically plausible for the business plan to work out. So that doesn't exist. So what if I have 80 little trades? I should not 80, but if you tiptoe into these, for example, one at a time. Okay? 5 trades a day. Okay? One winner. 2 break even. And 2 losses. Okay? After 20 days, you'll have 20 trades open. If you're trying to trade a trend. Okay? Okay? Now, the thing is, you're like, well, Wayne, what about these losses? Oh, they'll get washed out. You'll be fine. They'll get washed out. Because they're only 20, 30, 40 pips each. Probably not even that, right? But these will be open for 3 months. Okay? One trade could be 1,000 pips. The second trade, 900 pips. The third one, 800 pips. The fourth one, 600 pips. Okay? And all of a sudden, it's big money, dude. It's big money. But you can never do it without the long-term vision. If you can't, right? Yeah, that's right, Jeff. The first week, in fact. Okay? On the 18th of December, we exited all the yen trades. Thousands and thousands of pips. Okay? Yeah. In fact, there's probably at least a dozen people that made many thousands of pips. Yeah. Many thousand. Like 6, 7, 8, 9, 10,000 pips. Yep. In December, we exited the whole thing. In January, it was about selling. Yeah. Yep. Okay. But Jeff, I sense that you're a bit terse. Have I upset you somehow, Jeff? I've noticed a few comments kind of poking and poking. Is everything all right, Jeffy? So my message, Jeff, was lower your lot size, focus more on your long-term vision, spend more time planning, try to get trades with a fundamental bias, let the winners run, keep the losses small. Right? Cool. Yeah, well, how many have been around for 20 years? Okay. So, anyways. Yeah, so there you go. So I'm not trying to sell you, Jeff. I don't want you to invest, all that kind of stuff. So I'm trying to give you a message. So the message that I'm giving you, I think, is valuable. Okay? right? I'm not trying to tell you my system is best. I'm not trying to get you to invest money with me. I'm not selling you signals. I think my message is pure, is positive, is a universal truth, and is a message geared to help those, even those that have been lied to by the gurus you refer to. Okay? So, yeah. So anyways, we'll get everyone's head screwed on straight, and I think things will improve. So again, here's what we've just been talking about. There's the role reversal. Look how beautiful that is, huh? Look how beautiful that is. The target is 139.68. Okay. Yeah, and I agree with that, Jeff. So I've never preached that, but Jeff, if you watch my videos from 15 years ago, you'll see that my tone has been the same, my attitude's been the same, my techniques have been the same, but not many gurus have had the NFA fly out to their broker and have the broker set up a dealing desk specifically to clear their trades. So, but yeah. All right. By the way, my major focus now is, and it's actually been for quite some time. I've tried a couple of times in the past, but to have dozens of traders working for me. That's what I really want. I've always wanted. I tried it, it was 8 years ago. Probably 8 years ago. I had a team of traders working for me. And we had a standard kind of trading desk, and they were funded with money. And but for whatever reason, I guess most likely I didn't support enough, but I want people to think independently. So I let people trade the way they could, and it wasn't successful, but they had real money. They were trading with the idea of like in a professional fund. That vision is being retried again, but with like years of development going into it so that it will succeed, and having dozens of traders trade as a team is just so fantastic. Right? So fantastic. But I can tell you, if you only try 10 pips at a time, I don't think you won't ever get to big money. You might do okay as a trader. You won't get to big money. Excuse me. Let's take a look at some exotics. There's some good setups on the exotics right now. I have a sell order at 1550 on the Rand. I just, with coaching and stuff, I can't be here right at that second. I was hoping to go up a little further on a roll reversal, but that's a great little trade there. I have one a little higher here on the peso. I missed this one yesterday because I was doing the dollar trades. I'll take those first and foremost. There'll always be a double top before the drop, so I can wait. So we'll see here. Test of patience, of course. And euro is going to get strong soon, which will impact this trade. So it looks like the better trade now, but on the long run, this one will be, because we're rotating out of euro into dollar, and then suddenly from dollar back into euro. So there's a give and take. But this is something we talked about, a month or two ago, and that we're in that process now of rotating back out. Well, Ananda, yeah, we have a process. We have a whole group. We have dozens of people working on that right now. So I know we're going to have the people. Okay. Okay. I know we're going to have the people. I know it. So anyways, let's get out of that. Let's take a look at commodities. Okay. Ananda, are you in the group? Yeah, Ryan's a good guy, but I also like overachievers. Oh, yeah. Yeah. Right on. Yeah, you got to do all the courses first, for sure. Get. All right, so we'll take a look at gold. We did this yesterday. There's the plan. Are you going to do it or have you already done it? Let me move this across. Okay. You can have it any way you want. I'm looking left to predict right, just like cars. The movie, turn left, right? Drifting. What do you think? This is just a little 5-minute chart, but you see why I have longer term plans and then carry them out on the smaller time frames? It's important, isn't it? See, if you look at this in context of what I drew out yesterday to the left, you could say, this is what's happening right now. And if tomorrow looks like this, you'll still have everything in mind, but like this is what I did yesterday, and this is what's happened today. To me, it's what happened. Cool, right? Okay. So, right, where's the disconnect? The disconnect typically is you're not a bull or you're not a bull yet. And that's perfectly fine. Okay? So you create the next if-then statement. Okay? We got some resistance here. We got some support here. So what are you going to do next? So you'd have two plans. If it pulls down, will you buy it? Well, you can't answer it when it's happening because you're going to react emotionally. So you have to say it now. And you, if you have to, print out the chart, draw it, and say that's what you will do. Okay? This next plan is if it goes higher, will you buy this? So let me do it in a different color just so they're separated. Well, of course, that's the worst color. Purplish pinkish. Okay, would you buy this? Okay, you just planned out tomorrow. That's how you do it. Okay, let's talk about the the scalping issue versus what my message is. So let's just talk about the math briefly. If you were making 10 to 20 pips per trade, okay, and you were trading with tiny slot sizes like I'm teaching you, you would never make any money. Okay? It just wouldn't add up. So the only way to make that work is to increase your lot size so that you're not making $10 a day, but maybe you're making $100 a day or $1,000 a day or something in between, because your lot size is large relative to your account size. And now if you make 15 pips, you're like, oh my God, that's $150, right? So that's what you're doing. The problem is your downside risk, the probability of you being, let's say, 50% right all the time. Like even if you're a 50-50 trader, win and loss, think of it that way. If you're a 50-50 trader, you're not making any money because your losses are going to be, let's say, hopefully, no bigger than 10 to 20 pips. So you have 10 to 20 pip upside. Therefore, your downside is 10 to 20. Now, we also know many people that go for 10 or 20 pips have more like 50 pip stops. So now the risk reward ratio is even worse. So if they're 50-50, they're losing money. But let's not talk about those guys because that's like just stupid. So let's say if you are risking 20 and going for 20, risking 20, the problem is you also have a spread in there. So now no, it's the other way. You're risking 20 to make 17. Okay, so that skews things a little bit. But let's say if you're 50-50 trader, okay, that means in one day you have 10 wins and 5 wins and 5 losses. You haven't made any money. So now you need to move to what, 70-30? Oops. Okay. Now you have to be right 70% of the time. Okay. And you still won't make much money because, okay, you'll have 3 trades that lose, right? So you've lost 60, right? And we'll say 140. Okay. I think, in my opinion, you would simply make more money. Okay. I think you would make more money than this on one pissy little swing trade. One. And I don't mean for the day, I mean for the week. One trade with good technical setup at the exact hour you expected, and I mean with less risk, more reward, less, just, okay? But the next thing is I want you to lower your lot size. So I'd rather you have lots of little trades, one individually taken. So, right, it's not like you to make 1,000 pips. So let's say 1, 2, 3, 4. Let's say they average 200 pips each, which is just a basic swing trade. It's not like you're risking 100 pips on each as well. So it's not like I'm saying, well, 100 pip stop, and these are all 200 pip potentials, right? So it's not like I'm saying risk 500 to make 1,000 and you'd have a 2-to-1 risk reward ratio. What I'm suggesting is maybe like, let's say we'll stick with 100. You do the first one, let it go, get it to break even, and then do it again with the second one and the third one. And over the course of time, they're all going to average, let's say, about 200 pips, maybe 300, depending on the time of year. But if you do each one individually, one on its own, and you had a 100 pip stop, then you never risk more than the 100 pips. But now, after 5 open trades, you have a potential of at least 1,000. So you have a 10-to-1 risk-reward ratio. And the way to make money is to have many of these hit. Okay? But my focus here as a coach to you is how can we give you the opportunity and keep the risk as low as possible? Okay? And if you get the math right, okay, you could be wrong 70% of the time and not lose money. No, you're not going to make any money, but you're not going to lose. But your winners should always be smaller. And by the way, I don't think you need 100 pips on a trade, right? 50 might be your number, okay? And you're going, let's say basic numbers. Let's say every month you're going to make 1,000 pips, that on average or whatever, right? But every trade or any given moment, you only have 50 pips risked. You see? And if you have a trade open and it's losing, you don't add another one. You either knock out, try again, or get to profit, move your stop, and then add a second one, add a third one. But the thing is, I'm trying to keep your losses tiny. Now, if you very rarely have a winner, you have a different problem. And that could be fixed. Okay? But with basic knowledge of technical analysis and a basic trading theme, so I'm like, do you believe gold is going up or down? I don't know. Well, then forget it. I can't help you until you figure that out. But now if you know you're a bull, you say, okay, well, are the market conditions bullish? Yes or no? No. Then don't trade. Are the market conditions bullish? Yes. Are you at support? No. Then don't trade. Are the market conditions bullish? Yes. Are you at support? Yes. Okay. Pull the trigger, drop a stop, and let it work out. Okay? Now you start putting those together, your numbers are going to get right. Okay? You see that? Like, you got to have the right math to get to the result that you want. And much of what people do, the math just never works out. Right? You're profitable, you're profitable, you're profitable, you're profitable, you're profitable, you're broke. Why? You never had a chance. You're fighting physics. Right? You're like, well, it'll work out if there's no gravity. Well, dude, you're on Earth. Okay? Okay? So, I think you need to start with a math you believe works. I think you should bust out an Excel spreadsheet and do the math. Okay? How much risk, how much reward, right? It's going to be very difficult to be a scalper, make money, and risk, let's say, less than 1 or 2% a month. Like, think about that. How do you say, I want my worst month to be 3%? Because 3 months in a row, I'm fired. Okay? So, what if that's your worst month? Or what if your worst month is 2%? And by the way, sometimes that's actually a good thing, because what happens is when you bail with a portfolio, you've gone from like 30, 40, 50, sometimes 100 trades open to 0 because you took profit on everything. So the next month almost always is a negative month. Do you guys know why? Okay. What happens on a month, the month after you make, let me throw out a number, it'll blow you away. Okay, let's say in December, you exit a bunch of trades for 10,000 pips profit. You know what? Let me go blank here. Come on. This is distracting. Blank. Okay. So let's say December, you make 10,000 pips. You can put whatever number you want on that percentage-wise. January is going to be a losing month. February is going to be a losing month. And maybe even March. Why? Now, if you're able to, you can get those to be positive or break-even months. But why is it? And why is June a huge month? Think about it. You only exit losers. Only exit losers. Only exit losers. But you have floating profit and loss. So your floating P&L could be, instead of me putting a number here, let's say 10 open trades, 10 trades. Then another month goes by and you got 20 trades. I have to do it this way, trades 20. Okay. And by the end of March, you have 30 open trades. Okay, open. Above break even, and you exited your losers. So you have a bunch of losers here. Negative 10, negative 20, negative 30, negative 10, negative 20, negative 30. A bunch of all those things. But now you got 10. Then another month goes by. Now you have 20 because you added 10 more. Now you got 30 because you've added 30 more, right? And this goes all the way to June. So March, and then you got April, May, June. So now you got 40, 50, and then the June meeting, you're out. You exit. Okay? And now you're up 20% for the year. And you go on vacation. I doubt you can do that scalping. Or at least I wasn't able to. Because to me, the math never worked out. Because now you have to be right 70 or 80% of the time. Every day, every week, every month, every quarter, every year for decades, you have to be 70 or 80% right. I'm not able to. Sangam, the machine is custom made. We had to custom make the motherboard. No, I don't believe so, Mahir. You guys see, like, this is possible. Bust out an Excel spreadsheet, do the math. If you can't do the math, you don't know Excel, learn. I have no sympathy. Education's free. Take a class. Right? You got years. Okay? Okay? So, you figure it out. That's the thing. If you're capable, if you're willing and able to do the work to figure it out, figure it out. That's the cool thing about Ryan. Someone said, it's good that I have faith in Ryan. If I said something like that to him, he would go do it. Well, just go take a college level class on how to use Excel. Okay. And he'd come back and he's like, I spent the entire weekend. I did 40 hours worth of work. I'm an expert now. I know jujitsu. Okay. So anyways, bust out an Excel spreadsheet and start with the question. Start with this. What did Wayne explain about portfolio management And how would you plan something for 6 months? Now, I'm only telling you to do it 6 months out, so it's not even that much work. Okay? And say, okay, if I have a certain percentage of losers and a certain percentage of winners, okay, and then lot size and all this kind of stuff, and my goal now isn't to have lots of little winners. Meaning take profit, right? Like you do 10 trades a day and the next day you show up and you have no trades open. It's all you do is 10 trades a day, in and out, in and out, in and out, versus maybe 10 trades a day, but your 4 winners you leave open, or your 5 or 6 winners you leave open a little longer. Well, how do you know what to do? Well, this is where fundamentals, trend, long-term charts, macroeconomics, that's where that fits in. But just do the Excel spreadsheet and figure it out and say, well, if, let's say now you put a cap on this. Let's say your average loser is 40 pips, let's say. Okay? And your average winner is 200 pips. Well, that's the basis of basic swing trading. If you can't do swing trading, if you can't even fathom a 200 pip trade, you don't know how to trade properly. Right? A lot of people can't. They're like, oh my God, I can't even fathom that. You don't know how to trade. In fact, you'll be a better scalper if you knew how to do that. Okay? Trust me, I'm not poo-pooing on scalping. I love scalping, but you got to know how to trade. Okay? Because then you can make decisions. I want you to be able to make decisions. So do all of this, and what you'll find out is, oh, you can have lots of little losers. It's not a problem. It all gets washed out. And by the way, if you know how to trade technically, which means you only buy at support in an uptrend, and you know where to put your stop, and most of the time your trades work out because you're trading with the trend. It's definitional. You should be, but you're able to move your stops, and sometimes you get unlucky, and so even you're going to find that 50% of your losers are break-even traders, or break-even trades, right? So let's say 50% of your losers are for 40 pips. The other 50% of your losers are for negative 4 pips. So actually, it's more like your average loss now is 21, but now you let your winners run, and you let them run. You'd rather take a negative 4 than get out of a trade before you hit your 200. So now you might find 30 or 40% of your trades are worth 200 pips or more. Or more, because now you're incorporating fundamentals and macroeconomics and what the central bank is saying and some seasonality. And now you're holding trades from March till June. And some of these trades are not just worth 200, they're worth 400, 500, 600, 800 each. And you're like, well, you have to get pretty good at a lot of different things for that to work out, but at least the math will work out, because not only do you want a lot of pips, you want the smallest risk possible by taking every trade individually and having small lot sizes so that you can go through certain periods. But remember, these will be slightly negative numbers or small numbers because you're letting your winners run and you're not cashing out. So these are not going to be big numbers. Okay? Because, by the way, have you ever noticed like these copy services and stuff, and you see that these guys have been profitable for like 9 months in a row, and then suddenly you get in, you pay the $12 a month for them to manage your money, and they turn out to be losers? See, what's happening is they're not exiting their losing trades. They're only exiting their winning trades. But that's not what you want. You want to have lots of little losers and big winners, or at least trades that are worth something, right? Like, I'm not saying going for home runs. I'm saying trade with the trend. And the definition of that is if the trend is up and it's making a series of higher highs and higher lows and higher highs and higher lows, well, you should be buying dips. It's not that complicated. Okay? But then once you're done this, by the way, okay, once you've done this, and this might take you a week or two, depending on your skill, but I want you to think about it. Yes, Peccary, absolutely. They're absolutely doing that, Peccary. Okay, once you get all this together, like figure out, well, what would your lot size be and all that kind of stuff. You'll find out your lot size is tiny because let's say at the end of June, you're booking 20% profit. If you get your math right, like you're actually attempting a business plan that could possibly work, you'll find out you're over leveraged. You're like, dude, I'll be at 100% at this rate. We'll cut your lot half, significantly. More than half. Okay? And that was one of the things I found out when I did this for myself 18 years ago. I found out I'm way over leveraged. And one of the best things I ever did was lower my lot size. Okay? Amazing. Okay? Can you imagine having one mini lot per $100,000 of cash in your account? Think of that. You have $100,000 in your trading account and you're trading mini lots. You're like, well, Wayne, that's ridiculous. It's not ridiculous. Okay? You place a trade. If you lose, it's almost worthless. Like you don't even notice it in your trading. Like you lost $30 on 30 pips. Well, you got 100,000. What is it statistically? Almost nothing. Okay? You lost $30 today on a bad trade. You're like, yeah, well, I took a trade. It just didn't work out. I thought, I was doing something and it didn't work out. Okay, fine. But statistically, it's almost irrelevant. Okay? But the thing is, what if you're doing 10 trades a day? And 60% of them are winners, 40% of them are losers. Or 20% of them are losers, 20% of them are break even, 60% are winners. The losers now are really, truly minuscule. But even your winners are not that big. So if you're going to get paid, they got to be worth something. Your trades had value. You're in the business of creating value for yourself, but eventually you're going to create value for clients. And that's your value creation, where now you're going to get paid, not because you're doing any work, by the way. You already did the work when you took the trade and moved the stop. Now, do nothing and let it go to 200. Do nothing, let it go to 300. Do nothing, let it go to 500. Well, how do you know it's worth 500? Well, that's your job, son. Okay? Now, once you got this figured out, I'm telling you, go back and do the same thing and say, well, I make 10 trades a day, 60% are winners, 40% are losers. The losers are 40 pips. The losers are 20 pips. The winners are 20 pips. How much money will you make? And you'll find out you don't make any serious money. So now you have to jack up the lot size, and it's mathematical suicide. It's financial suicide. It does not work in the math. You will never control big amounts of money. You'll never have a private jet. You'll never live on a yacht with beautiful people, like all these childish dreams that people have. You're never going to achieve it because you're still thinking like a child. You got to get bigger. You got to be a boss. You got to build an empire. Okay? And that means you have to create value. Your trades should be able to be worth 300, 400, 500 pips. Okay? The only way you're going to be able to do that now is to say, well, I looked at the globe. I'm looking at global activity. I'm looking at global commerce, global commerce. Okay? Are factories being built? Is Japan buying oil? Why would Japan buy oil? They don't have any energy. Okay? So all this kind of stuff. Is the world active? If so, I can think of about 19 trades I could be on. And then when something slows that activity down, book some profit and then ask yourself, is this short term or is this long term? Okay? And you don't have to be magical or brilliant or ordained by God to understand this. It's macroeconomics. The reason we have all these statistics out there, oh, well, what's the factory capacity utilization figures in China? Well, the reason we have this number is to say, there's a problem, and then you adjust. You're like, really? That's the second month in a row. Is it seasonal? Who are they trading with? Who's not buying? Is this going to be a problem? Is it America not buying from China? Are the Chinese buying from Australia with this slowdown? Like, why the slowdown? You find out, it's Europe. Okay? And so you adjust, and you're like, okay, well, there's going to be a slowdown there, a slowdown there. Is it a reversal? No, but there's a change. And you pay attention to this, okay? The beginning is education. You have to get yourself educated. So you even know what the variables mean, so you know what variables to pay attention to, how to line them up as an analyst. And then the next step in your education is the intellectual thought process. Your ponderance. You stop saying, does CPI at 1.8 mean I should buy? You stop asking questions like that. That's not even the right question. But you have to get educated to know that. Then the next one is you're pondering it and you say to yourself, inflation, CPI at 1.8? That's interesting. That's where you need to get. Okay? All right, so thank Jeff Beck for the inspiration for that conversation. I'm trying to get a big mess. I'm not trying to impress you. I'm not trying to tell you I'm the world's greatest trader. I don't have girls in bikinis dancing behind me. I don't drive a yellow Lamborghini. I haven't left the house in a year. I guess we're all like that. But, I'm a regular dude with an unusual drive. And I want you to be on my side. In fact, I want you to be better than me. I'd like you to work for me. I'd like for us to work together. I'd like to ask you what you think and you tell me. And I follow that up with a question. That's my favorite part of the swing trading group. See, in the swing trading group, I do very little teaching. I don't teach you, but I do ask questions. And I love the conversations. And then groups of swing traders have conversations with each other. And I think it's the most inspirational part of everything where on Thursdays, I get to listen. And it's so inspiring. Like I said, I know I will have a crew of dozens of amazingly disciplined and educated and intellectual traders and investors because I already do. I already have conversations with them every week. I can see their growth. It's beautiful. And in 5 years, you're like, wait, 5 years? Yeah, in 5 years, we're going to be doing amazing things. It's nothing short-term about anything, guys. Right? There are dozens of people on a 5-year journey, and many of them, if not most, will fail because it's too hard, it's too difficult, it's too demanding, it's nearly impossible. But there are some that will make it, and they will be the best. Yeah, macro meeting. Yeah, I'm going to do a macro meeting today. Yeah, I am. I'm looking forward to it. It's amazing, actually. It's amazing. So I had to break the topic into 2 lectures. So we will do lecture 1 on capital. Okay. And like I said, here I am right here. There's the slide. So I have to get you into there. Amazingly difficult, though. Today I'm going to attempt to teach people graduate level economic models without any calculus. But we're going to do it. And I have 50 slides just for the first half of this lecture. Do you understand that? You see that? That's lecture slide number 50. It'll be about 54 by the time I'm done today. We're still working on it. 50 slides for the first half of the lecture, so I'm not holding back. There are those taking this macroeconomic course and are going to get graduate level education. So I hope I can do it in a way that it works. I think you're going to get it. I think you're going to get it. And then we'll have to focus on the next step. And the next step is how to make all the gobbly-goo improve people's lives. So now we know what to focus on and where to invest our money. Oh my God. And then I think 2 weeks from now, 3 weeks from now, we're just going to do like basic GDP calculations and stuff, all that easy stuff, you know. So it's going to be epic. So again, thank you for keeping me inspired and focused and interested. And you're good people. I like you. I like spending time with you. So thank you for being on my team. Thank you for being part of FX Bootcamp and Forex.Today and Trader's Way. It's really cool having you in my life. So I will see you later today or tomorrow. If you want to join my live group, you have to go to fxbootcamp.com, sign up to take the training courses, and then it'll say, do you want to join the live group as well? And you have to pay for that. It's not expensive. Peace on earth. May the pips be with you. May our profits be above average. Cheers.